Hey guys, RC Peck here with Fearless Wealth. So I'm going to start the conversation off today with a COVID-19 cases by country chart. Oh gosh, this is so heartbreaking to me because the yellow faded line at the top is the United States. And this is basically a chart of how you manage a crisis. Or what this is a chart of how good of a leader you are, how well your country has been led. And I don't know, there's probably 30 names on here. Most of them have been shaded lighter just to show Sweden. So Sweden didn't experiment, or maybe aptly, the world didn't experiment except Sweden. The world shut down everything to protect the people who had comorbidity with COVID-19, and Sweden did not. They followed best practices. Let's be smart. Let's use common sense. And so I'm rooting for them. And so far, as you can see on here, their leadership is turning out to be the right answer. Now, I'll say this, Sweden's only 10 million people. And I do have this belief that the smaller the country, the better it's managed. And one of the reasons I believe this is, you take a country that's 10 million compared to a country that's 90 million or 100 million and then 300 million and then 1.5 billion. It's harder to manage those sizes. So one thing Sweden does have in its favor is that it's only 10 million people. So that is when I want to start this conversation off with. And this is it's leadership. It's how to lead in a crisis. It's how to stand up and say, what do we know and what don't we know? And let's manage this properly. Okay, we've got to talk about oil. So the front month of oil, or May's future contract, went negative 2 days before closing out. And this is another thing that you could file away in the never thought I would see that. Now, we saw negative oil prices before we saw negative interest rates in the United States. So basically what you see here is on Monday's close, Monday and Tuesday, the May contract of oil was negative. And that's because there's no place to store this oil. And when the future contract ends, so May's contract ended on Tuesday, what was that, the 20th? April 20th. If you are still long, you have to take delivery. And so people were basically saying, I can't take delivery of my oil. There's no place to store it. So I'm paying someone to take it. And literally they were paying people $37.63 to take their oil. They're willing to lose it. So we got negative oil, which is just absolutely incredible. Never thought I'd see that. I never thought interest rates could go below zero before, 10 years ago. The world didn't think it could do that. And now this is crazy. We have commodities that can now go negative. And I read that the Chicago Mercantile Exchange is now allowing people to buy puts that are negatively priced puts. Oh my gosh, this is incredible. But basically what this is a reflection that there's no more space to store oil in the world. I mean, I think what I read was like May 15th, there'll be no more places to store oil. The world supposedly is going to start opening up right around May 1st, May 4th, depending on what country you're in or what state you're in. So it will be interesting to see what happens to oil. Now, I will point, and I've talked about the energy sector for a long time. This isn't a really interesting chart. This is how much the energy sector represents in the S&P 500. So in 1980 over here, you can see that the energy sector represented about 25% of the S&P 500. Right? And today it represents today it's actually representing right around 3%. So this is something I've been talking about for a very long time, that these sectors will stay around, but they're going to change in their importance, right? Energy is just not as important today, at least oil, crude, Brent, West Texas, natural gas, unleaded, that type of fuel is not as important today as it was even just 40 years ago. And this is telling you how important energy is, or how much less important traditional energy is. And part of the reason is, look, guys, part of it is Zoom. People are figuring out that you don't have to get on a plane or get into a car, whether it's to go to work or go to a meeting. But this is also about the battery revolution and going electric. And this is not going to change. I've also talked about how the financial sector is not necessarily the sector that we should be looking at anymore. In fact, everything is going technology and communication. And I say communication because the communication sector is pretty much Google and Facebook. S&P had to get those two out of the technology sector. So crazy things are going on. Now, to me, this is just hilarious. So this is Reed Hastings in like his kid's bedroom, or like a bedroom in his house, or is that like a really big boat that he's on? I just find this really interesting that he is reporting like this was the best room you could report from is the bedroom. Like there's got to be an inside joke about why Reed is in somebody's bedroom, and it doesn't even look like there's there's blankets on the mattress. It looks like that's just the mattress cover. And I love it. Things, again, we could file away and never thought you'd see until this pandemic. And of course, I love just this little kind of dig on people looking in their house. And look, guys, I'm guilty of this too. I'm always thinking, where can I do a Zoom meeting? What's the background look like? So I'm guilty of this, but I just thought it was funny how, I've got to find the room or my friend's house or somewhere where there's some bookshelves, because that then means like I'm smart. And then if you think I'm smart, then you're going to listen to me. I just think it's really funny how things are changing. Okay, here's another thing that's changing. This is the percentage that the 5 biggest stocks represent in the S&P. So you take the 5 largest stocks based on market cap, and what percentage of the S&P do they represent? So back at the end of the 90s, the last bull market, the longest economic expansion ever before this last one ended, we call that the 1990s, and the 5 biggest companies represented 18.5% of the S&P. Now here's what's interesting here, guys. This is accelerating. This accelerated into the end of this economic expansion. So the economic expansion that we just went through was 129 months. The longest before that was 120 months, called the 1990s. We just finished 129 months. Okay, now when we did, the stronger got stronger, the weaker got weaker, and everything in between just stayed everything in between. So this goes even more to my conversation that the energy sector will continue to get smaller and smaller, okay? And the financial sector will continue to get smaller and smaller as a percentage of the S&P 500. Those sectors are becoming less significant, and we want to be asking ourselves, well, what sectors are becoming more significant? And the answer is technology is one of them. Healthcare is another. So I think this is just so amazing that during this most recent stock market correction, that the 5 biggest became even bigger. And I'm sure that's going to correct, but I don't think that's going to change. I think the only thing now change that are antitrust laws. But that's the government having to get their act together, and, who really wants to think of the odds on that? Okay, now look, I put this in here. First of all, I think this is funny. Airlines sending me we're in this together email. Where were you when my suitcase was 51.5 pounds? First of all, that's funny. Secondly, you just heard me talk about that the U.S. just ended its largest economic expansion in U.S. history. So the U.S. is about 243, 244 years old, and we just finished the largest economic expansion ever. If there was ever a time in the last quarter of a millennium to get your books in order, to get your financial house in order, it would have been 129 months where everything was given to you to get things right. And the airline industry didn't. What they did was they took 96% of their free cash flow and did share buybacks, which, hey guys, that's fine. Like, it's not illegal to do that. But then don't go whining and complaining when your airlines drop by 80%. Yeah, it's okay to go bankrupt. Now, here's the thing. I do believe we should protect people, but not protect businesses. And the messed up part of this country, to me, is that we protect large businesses. So I shouldn't even say businesses. This country protects very large businesses, and that's it. And I believe that this country should be protecting people and not businesses. Okay, I think that's it. Then I'm going to jump over to price charts. So let me do this. Let me jump over to price charts because I want to talk about a couple more things. So hold on, guys. I think we're here. I want to escape out of this, and I want to jump over to energy. Okay, so now I want to talk about energy a little bit more because something's really interesting. So this is a price chart of XLE. It's a long price chart. It's 7.5 years in range. And you can see that it fell with the rest. You can also see it never broke above its low of 2018. It's way below that. And if we were to pull up other price charts, I'll just give you an example. Let's just XLC, communication sector, for example. You can see that it never got below, the communication sector never got below its 18 low. So the fact that energy absolutely crashed below that, that is just another indicator. But so here's what's interesting. So energy crashed, no big deal. Now energy crashed pretty badly. So it fell top to bottom 61% this year. What's interesting is when oil went to zero, or when the May contract went to negative $38, right? I want to show you something. So this is I'm going to bring up West Texas Intermediate crude. So this is what it is right here. So this is the price of oil, West Texas. It broke down. Now I'm going to zoom in here, all right, because it broke down and then popped up higher. But what's interesting is when West Texas went from $20 to it bottomed at, let's just call it $12, the energy sector didn't fall with it. That's called a divergence, or a bullish divergence. So that was basically the energy sector saying, look, this is an anomaly, this is a short-term thing, and we're going to get through this. And I find that really interesting. So for all you traders, energy might be a good trade or a shorter term trade. Now, I just want to show you something interesting. So this is energy divided by West Texas Intermediate crude. What I find interesting about this is, and I'm going to zoom way out and look at 2 decades of data. Right here, this is the last stock market crash between the 2 blue lines. And as you can see, there was a point where the energy sector, the energy stock sector, greatly outperformed oil itself. Now, part of the reason is oil collapsed during this 2008 crash. We've got the same thing here. Look at that huge spike. That also leads me to believe that oil is going to get back up off the ground, and it's going to get back to its $20 or $25 or wherever it finds its median or its balance. I don't know if there's price discovery anymore in energy. Maybe the Fed's going to start buying barrels of oil. Anything is possible today. But I see this as being very similar to this huge spike here. So that's just one sense of what is the same. We're getting this huge dislocation in prices. Okay, very interesting. So I want to talk about gold. No one, and I mean no one, is paying attention to gold. And I think it's because everyone is gawking over at oil, and they just can't believe oil has gone negative. Now, only went negative in its May contract. It went negative because there was no more storage, or very little storage. So it's a fascination, and the fact that the world is going to start opening up in May means we've almost likely seen the bottom in oil. That has happened. So again, for you traders looking to have a trade, I would be looking to trade either natural gas or one of the oil. It could be an oil tracking symbol, and those have their own big issues, but very interesting what's going on here. That's why I don't think anyone is looking at gold. Now, this is a price chart of GDX, and I've talked a lot about this $29 to $31 price range that GDX could not get above for 7 years. So down here, this is a base. This is what's called basing, a 7-year base. And in the world of technical analysis, the bigger the base, the higher the space, right? The bigger the base, the more this thing can move. And this is just, it's not amazing that it broke $31 because it was an inevitable thing. We didn't know when. But what I find interesting is a huge clean out here in GDX. And then when GDX finally did break to 7-year highs, no one is noticing yet. Everyone is over at oil right now. And I do believe that GDX wants to get to $62. I do believe it wants to get back up here to its old lifetime high. And it's just amazing that no one is paying attention to it now. GLD, which is a tracking symbol of gold, of course, it broke through its 1385 range. It also broke right here through its 1550 to 1600 range. The next big, this is GLD, its next big resistance is on GLD, it's 174. So it's about 13 points or 8% away. But like you've heard me talk before in these videos, gold is at lifetime highs in almost every other fiat currency on the planet except dollars. So something very interesting is going on in oil. And I find it just doubly or triply interesting that just no one's talking about it right now. No one's talking about it. Okay, lastly, I want to talk about some indicators that I track to see if the market has bottomed or not. So let's just go ahead and look at those. Create. I want to, there we go. Much better. Oh, that looks much better. Okay, so I'm going to look at 6 indicators here of as far as markets bottoming. So this is the first one. This is the New York Stock Exchange common stocks new highs. So this tracks how many new highs on the New York Stock Exchange. We want this to get above the black line. And it's close, guys. It's super close to getting above the black line. The next thing we want to look at is new lows. And we want this below the black line, which it's been below the black line since the bottom and it stayed below there. So that's bullish. And this is New York Stock Exchange common stock new lows. So that is bullish. So we have one close to becoming bullish and one that is. Let's go to the third one. So what this is looking at is how many stocks in the S&P 500 are above their 200-day moving average. And if you squint, you can see that it's just at the line. So this is another one that falls into super, super close. It was bullish. It came down to bearish. It's sitting right there. So this is super close to turning bullish. So far we have one bullish and 2 really, really close to becoming bullish. And then this is our fourth one. This is how many stocks in the S&P 500 are above their 50-day moving average, which is a much easier one to get above. And that's been bullish for a couple weeks now. That may have been one of the first ones to turn bullish. Again, it's the 50 days, much easier to overcome than a 200-day. So that's 4 that we've looked at. And so far we have, 2 bullish and 2 really close. And then we have the advanced decline line. So how many stocks are advancing on the New York Stock Exchange and how many are declining? And this is the top chart we're looking at. The bottom chart on everything I've shown you so far is just the S&P 500. And so here we are, guys. It's kind of a battle back and forth. This right here looks a little different. I have way too much information on the screen. Sorry about that. This looks, it's hesitating, right? So it's trying to figure out, should it go break higher? Should it kind of break down? Should it go sideways for a while? And so I like the AD line, the advanced decline line. And again, I'm going to call that one too close, but looking bullish. So of the 5 we've looked at, we've had 2 that are bullish, 3 that are close to becoming bullish. And then the last one is just the volatility index, the VIX. And we want to see this below the black line. And it's making its way, guys. It's making its way below the black line. So it's slowly coming down. So look, this stock market has firmed up. And the more time we move past that March 23rd, that March 23rd low, right? The stronger that March 23rd low looks. That March 23rd low remember, that was also the low of 2018, right? And so the market is defending that. I follow the S&P 500. I'm just going to go back to that chart so I can show you why I look at it. And so this is the low I'd been talking about. It dropped below there for a day. That might have been one day down, and then it popped up the next day. So it definitely defended that. And whatever letter you want to put to this correction, a V, a W, a U, an L, we got an alphabet soup of corrections. What we do know is the Fed is going to print whatever they need to print to protect big companies. And that's why we have this type of correction right now. So look, the market has definitely firmed up. Right now, the S&P 500 is at what's called a 50% retracement. So it's retraced 50% of its fall, which is a very common retracement. It doesn't say whether it's going to go higher or lower, right? It is just a common retracement. So this retracement on that stance from a Fibonacci retracement, it hasn't said good or bad. It just said, yes, this is the natural cycle of huge corrections that they correct back to the 50%. But definitely if the S&P can break above that, it's going to bring in a lot more. And I believe if it breaks above that, we're going to get 5 of the 6 bottoming indicators, if not all 6, to say from those indicator points of view, the market has bottomed. Now, that doesn't mean it's going to go back up to new lifetime highs. Right? It just means the market from a probability point of view has bottomed. It can obviously go back down here. It can test this again as the economy opens up again and we see where all the dead bodies are. And we learn that United Airlines is not going to be flying 900,000 people a day across the world. I think today they're flying about 10,000 people a day. So we're going to learn about these structural changes in certain sectors and subsectors. Like I said to you before, it's already happened with energy. There's a structural change, and it probably started a couple decades ago. It has started with finance. Finance, for sure, that structural change started in 2008. So that's now over a decade. So structural change is coming, and it is hitting the leisure industry next and the travel industry. And again, it's because people are now figuring out that they can just do a Zoom meeting instead of getting on a plane, or they can do a Zoom meeting instead of getting in the car and going to work. So airlines are going to permanently be hurt. So are hotels. So is Airbnb. So are car rental companies. So are cruise ships. Again, I go back to this. Who's going to go on a cruise if there's a 10% chance they may be stuck on there for a month or 2 months? So there's some permanent damage. I also think another permanent damage is a business office space or business REITs. People are going to discover that they don't need to lease out 50,000 square feet. Maybe they only need 25,000 square feet, right? And so that's going to put a structural change to that. All of these things I'm talking about are deflationary. So this gives cloud cover to the Fed to print trillions of dollars, which they are. So follow the price charts, guys. Look, and I'll kind of tighten this up with. It's kind of fun to look at these price charts, but what it comes down to is, what does your portfolio look like? How well did you manage this last crash or correction, however you're framing it? And can your portfolio handle the market, whether it's a W or an L or a U or some other letter that gets invented, right? Because you don't have to have anxiety, stress, or worry. There's a much, much, much easier way. And I believe that most people, if not everyone, they are over diversified. And it's that over diversification that is really costing and hurting them unnecessarily. So just think about that and go, maybe ask yourself that, are you over diversified? And what would it look like if you ended those and that 1970 idea and kind of brought some really nice Marie Kondo-like tidying up to your portfolio? All right, guys, I'm going to hit the pause button. Thank you for being in my world. Please go ahead and subscribe if you haven't. hit the like button. I'll turn the comments on, so when you have comments, let me know. And I think I'm going to start doing just a video once a week just on the questions, because I have some questions that are coming in. And so I think it might be nice to just answer your questions. So please ask questions in comments, or you can email them to me over at Fearless Wealth. Okay, guys, thanks so much. Take care. Bye.